Hello and welcome to this session. In this video, I'm going to discuss several different concepts of shares. Almost always we talk about shares as if there is only one type and concept of shares, but when you start reading the actual documents in practice, we see many different types of shares mentioned. And no wonder why we see significant confusion around this issue. For example, students are often confused on what concepts should be used while valuing a company, either in a DCF or a multiples valuation, and what is the difference between shares issued, treasury shares, shares outstanding, shares authorized, and so on. As a result, I have decided to talk about all important share concepts, what they mean, and how we should interpret them, and more importantly, which ones are relevant for us when trying to value companies. We also use the company Tesla as the case study to show all this in practice. Okay, so before we start, let's again highlight why we need the number of shares in our valuation. For example, when you do a DCF valuation, you first compute the equity value and then you need to divide it to the number of shares to get the value per share. Also, when you do a multiples valuation, you, for example, use the PE ratio. What is the PE ratio? Is the price over earnings per share, and therefore you need to know which concepts of share you need to use to be able to compute the earnings per share. Okay, so that's why in whatever type of valuation you do, the number of shares that you are going to be using is going to be important driver of your outcome. Now let's go to all the definitions and concepts of shares. So let's start with the shares authorized. What is that? This is the maximum number of shares the company is allowed but not obligated to sell. Okay, so that could be, for example, 100 million. That's the maximum number of shares the company could be selling. But what are the shares issued? These are the shares that actually the company has been sold to the public. This could be, for example, 60 million. Okay, and then occasionally, and for some companies very often, the company buys back shares from investors, and those are called treasury shares if it's kept at the book of the company. Imagine that this is 10 million. So this is the 10 million shares that have been bought back by the company. So as a result, the outstanding shares is defined as the shares that have been issued and is also at the hand of investors. How do we compute that? We could compute it as shares issued minus the treasury shares. Okay, so the company has issued 60 million shares, bought back 10 million shares, therefore the shares outstanding is 50 million. So that's the 50 million, and this is a very important concept indeed. And it's very important to note that treasury stocks are already deducted to get to the shares outstanding. What is then the diluted shares? These are the shares outstanding plus the additional shares that could come from dilutive securities. These could be options, these could be restricted stocks, these could be warrants and stuff like that, convertible bonds and so on. We have another video discussing details about these ones, but for the sake of illustration in here, imagine that there is 10 million of these shares, the dilutive securities, then we may end up to 60 million as diluted shares. So now there's another concepts is one is the common shares that you would often see, and that's in fact the regular shares. So anytime we talk about shares, we mean in fact common shares. So the common shares outstanding in here would be exactly the shares outstanding, that is 50 million. But the preferred shares are specific types of shares, and obviously they are preferred as the name stands. The preferred shares, they have some characteristics that looks like shares and some that looks like bonds. For example, they look like shares because they represents ownership in the company, but they look like bonds because they come with the fixed dividend payments. Okay, and in case of bankruptcy, these are preferred to common shareholders. So in case of bankruptcy or liquidation, the company first has to pay all the preferred shareholders, and then if something is left, it would go to common shareholders. Okay, so these also, there's concepts of shares authorized and issued for preferred shares that we will see afterwards in case of Tesla. There's another one that is called closely held shares. These are the shares that are held by controlling investors or the company insiders, like as the CEO of the company. For example, in this case, imagine that these are 10 million that is owned by, let's say, the CEO of the company. Then you would see also another concept which is called the float. These are the shares available for trading, and in fact is the difference between the shares outstanding and the closely held shares, because supposedly these closely held shares will not be traded much or often, so there's going to be 40 million that is the float and is available for trading. So what is a short selling is when an investor borrows a share of company and then sell it in the market in the hope that at some future point the price goes down, the investor buys it back from the market and return it to the owner. Okay, so that's essentially the way that the investor is betting that the stock is overvalued. Imagine that now the shares that are shorted for this company is 1 million shares are shorted. Then you can in fact compute percentage short as a fraction of, for example, as a fraction of float. So as a fraction of the shares that are traded, how much is it? So in here is the short as a fraction of the float is 3%. A large percentage short for a company means that there are lots of investors that believe and dare to short the stock. Okay, so the people believe that the stock is overvalued. There could be another concept, so could be float as percentage of shares outstanding, for example, and that's going to tell you how. So I have 40% of the shares that is available for trading and 50 million shares out there, so that's, I can get the percentage. So 80% of the shares are traded. So the higher this number, the more liquid the stock is. Okay, so now given all this, let's go and get this sense of these numbers for a company called Tesla. I have looked up the most recent quarterly filing from Tesla. We have already discussed, and there's another video discussing how to get these statements from publicly available sources, and I provide the link to this in the description of this video. You can check that video. So now let's go and find all shares for Tesla. So you can go to the consolidated balance sheet of the company. Here in the stakeholders equity, you see preferred shares, and there are 100 million shares authorized, but there's no shares issued and outstanding. So if we wanted to do this for Tesla, it would have been, so let's redo all this stuff. It would have been the preferred shares are 0 outstanding, but of course there's 100 million authorized. In terms of the common stock, there's 2 billion shares authorized because these numbers are in million. So we have 2 billion shares authorized, 948 million are outstanding as of September 30th, 2020. Okay, so we can put this in our filings. So 2 billion. And the issued and outstanding is 948. There's 0 treasury shares, and therefore, as mentioned, we have 948 million shares outstanding. So here is also given that in the end of September 2019, there was 905 million shares. So there's been more shares issued from the last nine months. Okay, so you can also go and see, in fact, what happens from last December up to September 30th, that the shares increased. And you can see, in fact, that in the consolidated statement of equity, if you go, you will see down here. So this is the 9 months ended September 30th, 2020. So from December 31st, as you see, there was 905 million shares, and then there were some additional shares created. That was we end up with 948. See, the company is issuing some stock in February 2020, there's issuance of incentive awards, there's exercise of convertible notes, etc. So these are shares are added, and we end up to 948 million shares outstanding by the end of September 30th, 2020. Okay, so these are the shares, all the shares outstanding, and these are the common shares as we saw. So I can say this is the 948 outstanding shares. And now what I want to discuss a little bit on the diluted shares. Where can I find the diluted shares? So by the way, in the beginning of the file, there's always mentioned the most recent number of shares outstanding. That is, it says as of October 2020. You see, it's a more recent number. It's been 947.9 shares outstanding. That's what, in fact, you should be using always. This is the most recent number, that is more recent than what you see in the balance sheet. So I 947.9, I add in here. So let's go to the consolidated statements of operations. There, the company computes earnings per share both for basic shares outstanding and the diluted shares outstanding. Also gives you the weighted average shares that is used in computing a net income or loss per share for common stock. So this is the 3 months, for example, ended September 30th. This is the number of shares they use, the basic number of shares outstanding, and then the diluted ones is 105 that has been computed. So note that 937 is not 948 that we saw in there, because this is the weighted average of shares throughout this period. And for the diluted shares, you can also see how the company gets 105. So if you go down here, you will see how the reconciliation of basic to diluted shares is computed. So there's 937, as you see, and then there's additional shares added due to stock-based awards, convertible notes, warrants, and so on. And then the company gets more than 1 billion diluted shares. So now 105, that's the diluted shares outstanding. So as you see, to compute the diluted shares, you would start with the shares outstanding, but adds to it the effect of all dilutive securities. This is in fact the most relevant concepts of shares when it comes to valuation and financial analysis. Again, we should always use the diluted shares in our valuation, since shares outstanding does not take into account the effect of dilutive securities. Also, note that the number we entered here is the weighted average diluted shares for the past 3 months, as we got from the company filing. Usually in multiples valuation, when we measure earnings during a period of, for example, 1 year, we would compute diluted earnings per share by dividing earnings during the year to the weighted average diluted shares during that year. But if you are doing a DCF valuation, since we are discounting future cash flows to get to the equity value per share, the best way to compute the diluted shares is to start from the most recent number of shares outstanding that you would either get from the first page of the company filing or from terminals such as Yahoo Finance, and then adds to that the dilution coming from restricted stocks, employee options, and other dilutive securities. So now let's go and get a little bit more numbers. We can get some further numbers from Yahoo Finance if you go to the statistics part, and that's also we have been explained in the previous video in the description. Also the link is, but here I just directly go to this number. So here you see shares outstanding 947.9. That is 947.9. So that's exactly the number we computed from the financial statements. The float is given to you, and also the held by insiders. What is the percentage that is held by insiders? A big portion of the stock is held by insiders, which is normal, since Elon Musk is the CEO and holds a lot of shares as well. I don't know exactly all the closely held shares, but this is a good approximation of the closely held shares. So 20% of shares held by insiders, which should be about 190 million. If I deduct this from the number of shares outstanding, this gives me about 758 million shares as floats. Here it gives us 759, which is kind of close to what we computed. And then you can look at the short as a percentage of floats and so on. So here's the 6% of the company float is shorted, which is quite a high number, which means that relatively speaking, a large number of investors thinks that the stock is overvalued and they are borrowing the stock, selling it in the hope that the stock goes down, and then they can buy it back from the market and return it to the owners. In any case, we see here that there are 57 million shares or short that we also enter it in the spreadsheet. Okay, so there is one final point I would like to mention is that you can see the TTM or trailing 12 month data for earnings as well as earnings per share in Yahoo Finance. Using these two pieces, you can also back out the weighted average diluted shares during the past 12 months, which would be 553 million of net income divided to 0.52, which is the earnings per share during the past 12 months, resulting in 1063 million diluted shares. As you see, this is close, but not the same as what we had entered above. And I remind you that what we got before was the weighted average diluted shares for the past 3 months, but here we have the past 12 months data. So these TTM diluted shares are the appropriate shares when constructing earnings per share for the past 12 month data. So I hope this video was useful for you to understand differences when it comes to different definitions of shares. The bottom line is that the concept we almost always use in valuation is diluted shares and not the shares outstanding. And thanks again for watching.